Rahul Singh, Head of Equity Research at Standard Chartered Securities, who joins us now. He's our market master for the day. Rahul, hi, good morning, and thank you for joining us. It's been, the market has actually been holding at that 7,900 level. So the month of August has been quite good for us, with a little bit of hiccup here and there. Do you think this good run will continue through the months of September and October, or are you getting a sense now that perhaps the market has reached a bit of a fatigue level?
Well, that's always a good question to ask in the markets right now. If you look at one analysis we did analysis of all the stocks in the Nifty, and in fact more than that, about how they have performed over the last 6 months versus earning upgrades, downgrades. And interestingly, it always throws up some short-term buying ideas. This time it didn't. Interestingly, what has happened is that the stocks where earnings have got upgraded have outperformed. The stocks where earnings have downgraded also have outperformed. So there are stocks where downgrades have happened and they have underperformed. Probably there are some opportunities there, but there are no stocks in the quadrant where where the earnings have been upgraded and the stocks have underperformed, which are the clear buy ideas. So there are no clear buy ideas. If you look across sectors, I don't see any clear buy ideas or easy money to be made. So to me, it just points out to a moderate kind of a return over the rest of the year at best, or sideways at worst. I don't see a significant correction also in the making, barring some global kind of developments. Barring any of those global developments, I don't see a significant correction either, because I think the government is going to get the benefit of doubt for another 3 to 6 months at least before the market starts assessing whether it's all the groundwork.
Yeah,
which
Rahul, that was the impression many people have carried. But does the court's announcement of its verdict yesterday change things a bit? Do you think we can see some inordinate delays in maybe mining and therefore power output, and therefore at least for 1 quarter we could see maybe a major downtick in the power sector?
Well, in a way, this Supreme Court verdict was coming, so I don't think it is entirely a surprise. Although when the event does happen, it does appear as a surprise. But it was always in the works, because if you look at all the statements and all the observations, it's all been negative. And to some extent, I compare it with the 2G license cancellations, which happened more than 2 years ago. It is very similar to that, and it was building up to that. It did happen. After that, the government got its act together, they auctioned, and now there are no more issues there. So you'll have to give it time. I think what has happened in the Supreme Court verdict is obviously a near-term uncertainty, but it's also an opportunity for the government to start from ground zero and make rules and processes transparent enough, and probably re-invite applications or bids if auctions is the right way, and move ahead. It'll take time. I mean, we are not trying to say here it will not take time. And I think the government also is focusing on increasing the coal production, not from these blocks as much as it is focusing on increasing the coal production from the existing producing blocks by relaxing some of the norms for environmental clearance and all that. So I think the government is also pretty clear that near-term relief in the coal production was never going to come from these blocks. So I won't really worry about near-term coal production output being significantly impacted because of this.
Okay, fair enough. Let's get one query that's been posted on our Money Control message board. We have Zia, who writes to us from Thane, and she wants to know if this is the right time to invest in the real estate market, or rather into real estate stocks. What's your view?
Well, I think it remains a medium-term story because the rate cycle has to significantly ease off before we see a sustainable rise in the real estate stocks. So at the moment, the stocks we like are Shobha, Prestige and DLF in that order. But again, as I said, a sustainable pickup in the sales momentum is probably going to be slightly more back-ended than in the case of, say, other consumer discretionary names like autos. So I would recommend probably autos ahead of real estate because they're not that rate sensitive, and we are already beginning to see sign of life in the auto demand, especially in cars.
Okay, so Rahul, at the moment, what are you working with in terms of a 12-month return from the Sensex or the Nifty? And what would the contours of the indices be, the range?
Well, we remain bullish on the cyclicals. I think on every correction, one should be switching from the defensives to the cyclicals, whether it's banks, cement, and industrials. These are the three big cyclical sectors in our view, metals to some extent, and autos. So we continue to advise churn on towards these names from a 12-month perspective on every correction in these stocks. In terms of the overall market return, that always becomes a little tricky, but if you look at the earnings growth rate we are projecting for FY16, it's in the range of 16 to 17%. Even if that doesn't come about, you're looking at 13 to 15% kind of earnings growth. Valuation multiples today are at 15.5, 16 times. Not much headroom there, maybe a 5% headroom. So I would say 15% kind of a return from here on without any valuation expansion is what everyone should be expecting. Anything more than that will be a function of how euphoric one gets on certain segments of the market.
You spoke about your preference towards the cement sector, Rahul. Would you buy a stock like Shree Cement now, which has both earnings going for it as well as the recent acquisition, or would you look at some of the other stocks in the cement sector, and if yes, which ones?
Well, we like ACC the most. It's cheapest, it's underappreciated in terms of what profitability improvement can happen. So that's our top pick in the sector. We like the whole sector. We think it's at an inflection point. It offers a cleaner way to play the capex cycle pick up in the country rather than going and buying deep cyclicals or the capital goods plays, each one of which has different issues. So cement that way and ACC in particular that way looks reasonably cheap.
When you say cyclicals, would you include PSU banks?
Oh yes, of course. Banks would be part of cyclical. They're a big part of cyclicals. And our view is that, you'll probably start to see some of these benefits of the projects coming on stream, the stuck projects coming on stream. Obviously, the coal block issue, we need to see how it sorts out. But the first benefit of that you will start seeing in the fresh NPL formation trajectory going down, and that's where PSU banks also come into the picture. But private sector banks, I think, would be probably slightly more would see slightly more front-ended benefits of this phenomenon than PSU banks. But yeah, I mean, obviously those are part of cyclicals.
Okay. You also mentioned your preference towards the auto space. What are the stocks that you're most bullish on? Is it pure OEMs, or do you like the auto anchors as well?
Well, we like Maruti and we like Bharat Forge. Those would be our picks in the OEMs and the auto anchor space, respectively.
Well, I may not be able to ask you every sector, but the mid-caps is where, the investor eye is trained. Can you pick some gems for us?
Oh, we have a pretty extensive mid-cap coverage. We have been very bullish on the agri space, so we like Kaveri, PI Industries. Those are the names we have been bullish on, and they have done very, very well. But again, from a 2 to 3 year perspective, they look very good. Arvind is looking very good. Arvind Limited, I know the stock has had a recent run-up as well. But there is enough happening by way of the ROC improvement in that company for us to see a kind of a sustainable kind of a re-rating going forward. So those would be a few names or sectors where we are bullish on.
Right, Rahul Singh, it's always a pleasure hearing you out on both the micros and the macros. Thank you very much indeed.